When you're shopping home and auto insurance, there's a couple companies that you kind of have to stay away from right now because there's a lot of turmoil happening, and there's a few companies that I personally would lean towards. Now, there's always the local company, so let me know in the comments below which local company has helped you in insurance shopping. If you're looking for new insurance, I'll put a link in the description below where you can get a quote from a local company that can shop multiple companies that we're going to talk about, but there's a few companies that I wish weren't on this list. Let's start off with Travelers. Travelers is one of my favorite companies as far as competitiveness. In some states like Virginia, we've had really good luck in Texas, not so much with homes, more car insurance related. We've had really good luck in Tennessee, and there's just some really good options that Travelers has. Unfortunately, you have to be a little bit careful, especially when you get closer to California. They've had some really big issues. They're losing about 65% of their net income off of California alone. Now, that specific state is necessarily California's problem, but the way insurance works with your larger companies is they spread that risk across all of the states that they insure. So when California has a 65% loss, that means your better states like maybe Michigan or Tennessee or Texas or whatever state that you're in might see a little bit of an increase because of the overall risk. The beautiful part about being with the larger companies is that you don't necessarily even see a big increase, even if it increases, because they're so large. Taking $3 from a person might give them the $5 million that they need because there's so many people insured. It's called the law of large numbers, and that's kind of a rule in insurance is when you have so many people, you can hone in the exact pricing that you need to be. So when catastrophic claims happen, they call them black swan events. When Texas freeze rains come through and it just causes lots of problems. When hurricanes start passing through Florida, when all of the things in California were the wildfires, all those pieces. South Carolina had a bad weather incident recently, and all those things add up. They plan for those. And even when they don't plan for them and they go crazy, sometimes they're kind of pre-planned for those, and it doesn't affect it as large as it could. Now, because California is so large, in the amount of losses that they took, this might affect you a lot more than I would like to have. I do like Travelers as a company, but you got to be a little bit careful depending on the pricing that they give you. If they give you a good price, good rate, and you like the agent, then great. That's something to lean towards. Where you look at the opposite, where Progressive is showing a 10% net gain in quarter one. So in 2025, Progressive has earned an extra 10% of income more than they did the previous quarter in 2024, which is showing stability. It means that their rates aren't likely going to go up. I know in some states they've had some minor rate increases, but that's normal. When tariffs kick in, when the cost of medical kicks in and the cost of metal and the cost of the inflation in general happens, then your companies are going to raise those rates. And because of that, they're going to have some extra profits. But if they beat that inflation part and they don't have a ton of losses, which is even better, then that company might lower rates. We've had a few companies this year, like we talked about in previous videos, that have lowered rates, and we're seeing better rates with some of those carriers. The opposite is happening with some of those that haven't caught up. So some people are still seeing large increases, 10, 20, 30% increases, because the companies that they're with now haven't done those increases yet. And they're just starting to hit mid-2025, where we talked about that's going to happen, where everything that came up already is going to follow suit, and all the people that didn't raise the price is going to start coming up as well. Some will come down, a lot will come up, and overall, you're going to find that playing field to be a lot different going into 2025 and 2026 as far as shopping for insurance. Again, if you are shopping for new insurance and you don't have an agent that you're working with, I'll put the link in the description below. So you can't have a video that doesn't talk about State Farm because they are the largest insurer in the nation. The U.S. has had no larger insurer for decades, and they're having problems. They're having a ton of losses. They were the largest insurer of California, although there is some back end with link a video that goes over more in depth on that does protect them, but they're calling for rate increases across the board. They're looking for California to do, I think it's a 30 or 40% increase just on the liability. So their umbrella policies, their high risk policies that they were okay with, they're not okay with right now because they've lost too much in that specific state. Now, they also insure other states that have had those major things like we just talked about, the Texas and the South Carolinas and all of those states that are having those issues. There's a ton of companies that are revamping their products in some of those major states. We've got National General, NatGen as we call them, is part of Allstate, but they're creating a new product that kind of mixes the two together. So exciting to see some of those options that are happening in a lot of those really good states. So they're super competitive on one product, they might not be competitive on another, but now they're meshing them together to where they can overall home, auto, maybe a umbrella, if you got a motorcycle, if you got a boat, all of those things where they can just generalized be more competitive without losing their shirts, taking on too much risk. How does that affect you directly? 22% is the increase on homeowners they're requesting in California. And I think they've already got them approved with the legality that they had to sign that they can't cancel. There's like a whole thing that they did. We might make a video on more about that if you're interested. I pulled up a list, Allstate, American Family, and Liberty Mutual. Those are companies that we're seeing or have already had rate hikes recently. Now I know Safeco, which is part of Liberty Mutual, they've already ran through theirs. So they're actually one of the companies that are decreasing their prices, which we're super excited about because it's now more competitive. Great product, lower price. That's a better fit for the consumer. So what is your next steps? What should you be doing to capitalize on these rate decreases or to fix these rate increases and prepare for them? Well, the first part is to make sure that you understand the agents that you're working with. That's the most important piece of insurance, in my opinion, is having the right coverage, because it's prices, yes, they matter. The paying the bill matters a ton, but if you know the right coverage and you have an accident, you're talking hundreds of thousands of dollars, if not more, versus saving another $20 to $30 a month. I get it, you still got to make the payment, but maybe it is time to shop. Maybe it is time to look if that is the case. So if you know the agent, you trust them, you know you like them, all of those things, then talk with the agent first. If that's not the case, that's where you go and link, you fill out the quote, you have someone talk to, and they start giving you that advice. So you can learn to see if that is somebody that you want to work with in the future. The second piece that you should be doing is comparing what you have now. Not everybody has lower coverage. Some people have too much coverage. So having an agent that can actually look at it and say, you have too little, or you have too much, or at least this should be tweaked. You have no idea how many times we come across a policy that's missing some major pieces, and some of them that just have too much, and it just sounded good at the time, but you're overpaying for something that you didn't need to pay for. The third thing that you should be doing is making sure that when you're doing comparisons, that you're not comparing apples to oranges. When you're getting quotes from companies, you're going to find that not everybody gives the same options. Some companies have packages, which is usually the route to go because you combine a bunch of stuff into one and it lowers the price and you get some extra things. Other companies just have basic policies. We've got some videos that go over that in depth on this channel that just have just the standard, just what you need to have to get by, get you through the day. And when you're comparing those two, you have to understand, is that package causing an extra price? You can take the package off, lower the price to the base, and now you're comparing a base to a base. That's why you have that. Also, having home, having auto, combining those typically will give you the best price. Not always, but most of the time, home and auto together, renters and auto together, is going to give you a net better price, maybe a little bit more on the auto, maybe a little bit less on the home, or vice versa. A little bit less on the auto, a little bit more on the home. And when you combine them all, sometimes it is cheaper, and actually most of the time it's cheaper, just overall. So looking at individual policies, especially when you're packaging them, can throw you off a little bit. Makes you wonder, should I be with this company? That's where that agent advice is going to come in, to where they say, yes, we should split them up, have your auto with this company, have your home with this company, it's going to save you an extra $300. Or no, we should package them together. I know you're going to pay a couple dollars more a month on what you're paying for your auto, but your home's going to come down another $800, which is going to net you another $500 savings. So doing those routes and understanding that process, it's difficult to do when you're doing the shopping yourself. If you are trying to do your own shopping and you just want to check some options, I've got a video here that will help you go through some quoting. Like we mentioned, if you're trying to get the best prices and you're going to do those apples to apples comparisons, then you might want to know the coverages that you should carry. The Car Insurance 101 is going to go a lot more in depth, which will lead to also a Home Insurance 101 if you're interested in learning more about what coverages you should be carrying. I'm Mark with Think Insurance. I'll see you in the next one.